Hello everyone, I hope so you will be fine. So guys, this is actually the part 2 and the topic which we are discussing, that is again integrated reporting. So here is the recap of previous lecture on integrated reporting, like what we discussed in the last or the first video of the integrated reporting. So uh, before we begin today's session, let's take a quick recap of what we covered in our last lecture on integrated reporting, guys. So here we go. So in the last class, we started by understanding what integrated reporting is. And we discussed that integrated reporting is a kind of modern approach to corporate reporting, actually. Okay, so in this integrated report, what we do, we combine the financial and non-financial information to give a comprehensive picture of an organization creates value over time, that how organization creates value over time. So simply under integrated reporting we include financial and non-financial information. So in the last lecture we discussed the definition of integrated reporting, we discussed about integrated thinking, also we also discussed about value creation process. Okay, we also discussed about six capitals. Okay, so we explored the six capitals that are central to integrated reporting. And in six capitals, the first capital was financial capital. Financial capital means say the funds available to produce goods and services. Okay, and then second capital was manufactured capital. It is about physical objects like building, infrastructure, and equipment. The third capital was intellectual capital, so which is about knowledge based assets like patents, systems, and procedures. Then the fourth capital was human capital. It's about people's competencies, capabilities, and experience. And the fifth capital was social and relationship capital. In this capital, we tried to explore the relationships with stakeholders, networks, and shared values. And the number six capital was natural capital. It was about environmental resources and ecological services. So these six capitals helps us understand the broader factors that contribute to value creation beyond just financial numbers. Like in simple, we discussed that in integrated reporting, we don't include only financial information, we also include non-financial information. So today, what we are going to discuss, we are going to talk about today about guiding principle. It's the third topic under the integrated reporting, 6.3, unit 6, topic number 3. So we are discussing today guiding principles and content elements of integrated report. So first we need to understand the basics of this topic. The basic is, I'll start from here, the content elements of the integrated report. Content elements means, say guys, simply the section, that how many sections we need to include in our report. Like in the financial statements, as we include income statement, balance sheet, statement of comprehensive income, statement of cash flows, statement of changes in equity. Okay, there are some other sections also of the financial statements, but under the integrated report, so how many sections we will include, that I will start first. Okay, the content, like how many sections we need to include. So here we go. The content starts from here, if you will just scroll down the sheet. So here we are discussing about content. So there are actually 9 content elements are there, which we generally include in the integrated reporting. 9 sections, you can say. Okay, so the first section, which is the section number 1 of integrated report, is organizational overview and external environment. So guys, what I'm trying to explain, I will try to explain under each section which questions we need to answer. Okay, or which kind of information we need to include. So when we write about organizational overview and external environment, generally these are the questions which we try to answer here. So you should know these questions, and then definitely in your exam you would be able to solve question very easily if you know what to include under each section. So the question under organizational overview and external environment is, what does the organization do? Okay, so here you have to explain about the mission of the organization. Okay, the vision of the organization, the industry in which you operate. Okay, the market in which you are operating, the size of the organization. You also need to include what are the circumstances under which it operates. Okay, this is what generally this is the answer for this question. Okay, so like what organization do, and what are the circumstances under which it operates. So it means in this section, simply, so you should remember this. So as a company, you will include information about mission, vision, industry, markets, size of the company, external challenges. Like external challenges means like economical challenges, political challenges, or environmental challenges. Now the examples, just I'm quoting example, like for example, Starbucks report, okay, on integrated reporting. It outlines its global presence. Global presence means in which countries they are operating, its commitment to ethical sourcing, like they are justifying that whatever the ingredients or material they need to operate this business, how they are purchasing, okay, are these sourcing ethical or not, and how climate change and inflation affect coffee beans prices. So this is actually the question. This is generally the information which we include. So this is the example for that. The second section, the first section I have said is clear. It is about organizational overview and external environment. So the second section of the integrated reporting is governance. Okay, governance. You know, guys. If you know, it is a process. Corporate governance. It's about corporate governance. That like that here. These questions you will answer. How does the organization's governance structure support its ability to create value? Like organizational structure we are talking about, governance, organizational governance structure we are talking about. Now the question, this is the question which we need to explain in simply, in simple words. Here you will explain in this section, you will explain the board structure. Okay, like who are the members of the board of directors, okay, chairman of the board of directors, diversity, values, ethical leadership, performance based compensation. Okay, so these are the things which we can include in the governance section. Okay, like what is our board structure, diversity of employees, values, ethical leadership, performance based compensation. Like here as an example it is quoted, guys. I know it is too much information, but you need to absorb these things. At least you should know like what is the section and what question you need to answer and what to include. So now here we got examples. For example, Unilever's integrated report. So Unilever's report highlights the board interdependence here, independence, sorry, board independence. Like definitely we studied in the corporate governance that board members must be independent members, and generally those people are non executive, right? Non executive directors. So here we will highlight the board independence, commitments to ESG. ESG stand for nowadays our operations definitely in every era our operations are affecting environmental, social, and governance, right? So that's why here we are trying to highlight our commitment to ESG. ESG stand for to environment, to social, and to governance goals. Okay, so how much we are committed towards the environment. Okay, and linking CEO bonuses to sustainability targets. Okay, so this is like what is the governance structure. I have explained here. You include here performance based compensation also. Definitely if the CEO, for example, is doing good things for sustainability, or for the targets of sustainability, they are achieving the targets of sustainability, they are not wasting resources, they are using proper measures to avoid the wastage of resources. So maybe we can link the salary of the CEO or the bonus of the CEO to the sustainability targets. So that's called performance based compensation. So then the third section which you need to include in the corporate reporting, that is the business model. Okay, so generally guys, a business model here in this section, what question you include? If you remember last time I have explained the business model also, that in generally in the business models, to create the value, we have four section: inputs, activities, output, and outcomes. If you remember those things, we discussed these things, right, in the last class. Now guys, here in the business model, this is the question which we need to answer. For example, what is the organization's business model. Like here, what to include here, how the business creates, delivers, and capture value or use. Here what we use diagram or flow charts to explain this. In business models, generally, as I told you, we got four headings: input, okay, the activities, input, like maybe, for example, if I'll take the example from manufacturing organization, input is the material, okay, or the six capitals, it could be maybe human, we definitely we need those things, okay. Then the activities means what operations we perform to convert the input into the output. Output is what, it is the finished product, okay. And then the outcomes mean to say what are the effect of output on the environment or on the people or on the customer, okay. So this is what is the business model here. So here what to include, how the business creates, delivers and capture values. Here we generally use diagrams and flowcharts, as I told you. As an example here, what, so example is like, for example, Airbnb's uh, report includes a business model diagram showing how it connects host and guest, okay, leveraging digital platform while minimizing physical assets ownership. Like in simple word, guys, you have to explain here about your input, activities, output, and the outcomes. Okay, then the next section is about what? Risk and opportunities. This is the fourth section of the integrated report. And generally here, what we do, we try to answer these questions. What are the question? What is the question here? For we have to explain here about the risk and opportunities. So here we have to answer this question. What risks and opportunities affect the ability to create value and how they are managed? It means our focus is on risks and opportunities. And generally here, to answer this question, this information we need to include. For example, we can include internal and external risk, whatever risk we are facing, internal or external. For example, external risk could be, for example, new regulations, the government is definitely, for example, publishing new regulations, we need to follow those, okay. So then we also need to include about risk management strategies here, which strategies we follow here, and emerging opportunities. As example, I'm explaining here for this section. So here, BP's report, for examples, discuss like risk, like for example, risk could be what, oil price volatility, if you are into oil and gas business, oil prices changes, time to time, so that's the risk. And regulatory changes, definitely there are changes in the laws and regulation also, that is also a risk for the companies, because in case of non-compliance, maybe there could be a heavy fine. So and you will also highlight the opportunities. For example, whatever in oil and gas sector, whatever opportunities are available, for example, in renewable energy investments, okay, renewable energy investment. So this is what is example, like you have to simply explain about risk and opportunities here. Examples are quoted here. You don't need to remember all the information, but at least you should know about the sections of the integrated report and the main questions and what information to include. Then the fifth section of the integrated report is the strategy and resource allocation. Here, this is the question which we generally answer, like where does the organization want to go? Okay, like it's simply your goal for the future and how does it intended to get there. Like simply here, what are your targets? And this is about how you will achieve those targets. So in this section, you will include the information about targets and how to get there. Okay, and what to include here, as I told you, strategic goals you will include here. What are your long-term goals? How resources means say capital, people, technology are allocated to achieve those goals. Okay, like example here, Tesla's strategy include expanding EV production. EV production means say electric vehicles production. Like this is the Tesla strategy, that they want to expand electric vehicle production and battery storage capacity. Okay, so this could be the strategic goal. And the report details investment in gigafactories and R&D, because they want to achieve these things. They want to expand electric vehicle production and they want to enhance battery storage capacity. For this, what they are doing, so they are investing in gigafactories and research and development. Okay, so this is what like is the fifth section which you will include in your integrated report. And the number six section is the performance. In this section, generally we answer this question, and the question is, how has the organization performed against its strategic objectives? Simply because you are trying to assess your performance. So you are actually here because first, previously you have set the target, strategic goal, right? Now you are assessing your performance, okay? The performance against its strategic objectives. So what to include here? Here you will include the results like financial and non-financial. Definitely, because when you are assessing the performance, you have to check. So what are the outcomes you got? Okay, the financial and non-financial, and what KPIs you have achieved, and or the impact on various capitals. For example, if you have done something, so you have to check due to your actions, have you achieved the KPIs? Have you increased some important capitals like financial capitals, human capitals, etc.? Like here as an example, what, like for example, Microsoft, company shows a revenue growth and increased cloud services adoption because they are mainly focusing on the cloud services adoption. So along with employee diversity improvements and energy efficiency statistics. Like here, guys, some words are technical, but generally here you are trying to show your performance against the strategic objectives. Okay, like how many KPIs you have achieved, what are the financial or non-financial information, or what are the financial outcomes. Okay, so or what are the impact of your performance on the various capitals. I mentioned the six capitals which we have discussed in the last class. Then we got it here, top section number 7, which is about the outlook. Outlook simply means like what challenges and uncertainties, like it's about challenges and uncertainties does the organization face, and what are the future implications. Definitely we got one section here also about the risk and opportunities. It's quite similar to that. So we are talking about outlook, like what challenges and uncertainties does the organization face. So here what to include here, you can include the information about market trends, geopolitical risks, climate concern, evolving customer demand. So these kind of information you can include here. Like examples here, we got it here. Coca-Cola's report discuss water scarcity and changing health preferences as a future challenges. Definitely Coca-Cola, they are using water, right, in the soft drinks. So and water, how they can use in more sustainable way. So they are explaining here, and they outline the strategies like developing low sugar products, etc. So this is what is the outlook. Okay, so generally here the information, as I told you, under outlook section you will include the information about climate concern, market trends, geopolitical risk, etc. And the section 8 is about basis of preparation and presentation. Definitely, guys, here you have to decide. Actually, the question is, how does the organization decide, decide what to include and how to report it? Because this is also a question, because when you prepare integrated report, you need to answer this question, what to include here. Definitely you need to include all the material information mean to say the important information. And here the organization in this section will include the information about materiality assessment process. Here the organization will explain actually how they have decided that this information is important and must be included in the integrated report. Okay, for example, Nestle's shows a materiality matrix. This is for the Nestle company. They show the materiality matrix, like kind of, you can say, the matrix or the table. Through that table they are defining that, okay, this is the table which we use to decide, okay, this information should be the part of integrated reporting. That is called materiality matrix. So materiality matrix they are using to show or to identify the top issues. What are the top issues? Like for example, issues could be a plastic packaging, climate action, etc. And explains how GRI stand for Global Reporting Initiatives, and SASB stand for Sustainability Accounting Standard Boards. How they are using GRI or Sustainability Accounting Standard Board standards to create the content of the report. Okay, so this is like what, like in simple word, guys, in this section you are trying to define how you have decided that which information should be the part of integrated reporting. For that you can show the materiality matrix also, kind of table. And the last section is about journal reporting guidance. Guys, I want to make sure one thing here. It's not necessary all the 9 sections should be there. Some in, maybe in some integrated reports you may find 5 or 6, but these are the maximum 9 sections which we can include. So here we got it here, general reporting guidance also. So here, what to include, for example, principles around capital disclosures, like what are the important disclosures, explanation of the business model you will explain here, other essential information, whatever other essential information like stakeholder inclusiveness, because we need to explain how we are interacting with the stakeholders, with the customers, with the investors, okay, or with the regulators, how you include them in your decision making. So you have to actually explain here the stakeholders inclusiveness or the sustainability context. Okay, the examples, for example, Infosys include a detailed section. Okay, in this section what they include, they are trying to explain how they disclose impacts across all 6 capitals, capitals: financial, humans, intellectual, social, manufactured, and natural. So like your processes, how they are impacting those 6 capitals, that you will include it here. Now guys, in the uh, uh, last of the content, because 9 section I have explained. So this is actually the value creation process, which is described by integrated reporting framework. I have explained last time about integrated reporting, some background. So there is one integrated reporting framework is there. Okay, so, as per the framework, so this is like the value creation process, which is described by IRR. And generally, this is what we include in the integrated reporting. Definitely, okay. This is like concise version. So, if you will look at here, so if you look at here, they are starting this process by the capitals. We got 6 capitals: financial capitals, natural, manufactured capital, intellectual, human, and social and relationship capitals. And then you can look at here, this is the business model, which is about inputs, business activities, outputs, and outcomes. And you can see here, so this model, business model, is surrounded by governance, strategy and resource allocation, opportunities and risk, future outlook, and performance. Okay, and then you will look at here at the last, again capitals are there about financial capital, natural, manufactured capital, intellectual capital, human, social, and relationship. Now the question is that how would you interpret this model, right? Or this diagram, how would you interpret? Simply, I'll start with this first blue boxes, these blue boxes. Actually, what are the blue boxes? Actually, the blue boxes are the content element. I have explained the 9 content elements, right? But as per integrated reporting framework, they are saying, okay, at least these sections should be there in the integrated reporting. Okay, that is strategy and resource allocation. One section should be about the governance. So one section should be about the opportunities and risk. One section should be about the future outlook, and one section should be the performance. Okay, so these are the 6 sections, or you can say these are the essential sections that must be included in an integrated report. Okay, now the question is that, so green boxes, so green, these are the green boxes. So that's the business model, right? So this is the actually central engine that explains how the organization creates value using the 6 capital. Okay, definitely we got some inputs. Definitely, if you're doing any business or any manufacturing business, we always have some inputs, right? Inputs. Okay, inputs means say what resources are used, and these are the resources, by the way. So these are the resources which we use. So what resources are used? Example: money, people, knowledge, etc. And then business activities, about what the organization does. Okay, what are your operations? And the output means say what it produces, for example. And the outcomes mean to say the result or the effect of its activities, or result or the effect of its output over the environment, over the people, that are the outcomes. So that also should be there. And then guys, we can see here the gray panels. These gray panels, like these are your capitals. Here you can also see the capitals are your input also, and capitals are your output also. How? Because once you will do this business process, like for example, if you are a manufacturing business, you inject the material, you do the production, you create, you produce the products, and you sold the products, and the products might affect environment, people, etc. So you have to explain in this in this gray panels, you have to explain the effect of your business models on these capitals. Okay, maybe due to this business model, which capital has increased, which has decreased, that you have to include. Okay, guys. And then, so we got it here. The last thing, if you will look at here, this line shows actually in the graph, it shows the bottom line. I'm talking about it means value creation over times. Actually, you can see the heading, value creation over time means that this emphasizes that integrated reporting focuses on short, medium, and long-term value creation process, and it is a continuous process, right? So this process will repeat. Okay, you will always have inputs, you will always have business model, you will always have output, and this process definitely you will repeat every year. And these are the sections, okay, which you will report in your integrated reporting. Okay, guys, I hope so it is clear. The content is clear. Now I'll move back to the again heading. Okay, now this is the general information, guiding principles, because guiding principles I'm going to explain now. What are the guiding principles? Because this section I have explained like content elements of the integrated reporting. So guys, please, you have to remember these headings at least and their concept. Okay, content elements I have already explained. Now I'm talking about guiding principles. Okay, what are the guiding principles again? Okay, guiding principle mean to say, guys, here they are trying to provide you the guidelines, okay, about the integrated reporting. It's just a general guideline which we need to think about, okay. So the first guiding principle is strategic focus and future orientation. So here the explanation is given here. So the report should explain, because your overall integrated report should explain how organization strategies support its ability to create value over time, okay, now and in the future. It should also consider short, medium, and long term impacts and how they use the capital. Actually, these things I have already explained in the integrated reporting content. Okay, but these are the guiding principle. They are trying to tell you, okay, at least your report should include the information about strategy, how it is supporting your organizations to create the value now and in the future. Okay, as example, it's quoted here, for example, Tesla's, because it's about strategy, how your strategy is supporting, okay, the value creation process. Example like Tesla's strategy to invest heavily in battery technology and gigafactories, okay, shows a long term plan and lead in a clean energy. Okay, this is like just example. And second, they are saying that second guiding principle is that the connectivity of information. Definitely we discussed this previously also, while when we create the report, so we should connect the information also. For example, the report should show how different parts of the business are connected, like strategy, risk, performance, governance, etc. Okay, so as examples here, like for example, Unilever's integrated report link its sustainability goals to supply chain efficiency, okay, employees engagement and brand reputation. They are linking sustainability with the supply chain efficiency, employees engagement, brand reputation, and they are also trying to show how social, human, and manufactured capitals are all connected with each other. The third guiding principles again, okay, it's about stakeholder relationship. We already discussed these things, but it's a guiding principle means at least we should include some information about the relationships with the stakeholders. Here you need to identify some key stakeholders might be employees, investors, customers, suppliers, communities, etc. And you will explain the quality and the impact of these relationship on the business. For example, like definitely if you are having a relationship with the stakeholders, how it's impacting your business. So examples, for example, Nestle report discusses its engagement with coca farmers, highlighting training programs to improve crop quality and farmers, that what you are doing to increase the quality of the crop, okay, enhancing social and relationship capital while securing Nestle supply chain. Definitely if they are providing some trainings to increase the quality of the crop to the farmers, definitely it will enhance your social relationship, okay, capital also. social relationship capital. Then the guiding principle, next principle is materiality. It means they are saying that okay, this is also one principle which you should think about the materiality, what to include, what not to include. So this I have already explained. Materiality means the important information, right? All the important information which you feel it is important for the decision making of the reader, so that information should be the part of the integrated report. And this section explains include only information that is material. Material means important information. Material means that you have to think, guys, what is important, what to include. Okay, this I have already explained. For example, for an oil company like BP, carbon emissions and regulatory risks are material. So this you should include in the report. Okay. Then uh, conciseness, definitely your report should not be 100 pages, it should be 4 5 6 pages maximum. So you need here, it means the report should be brief, clear, and focused, avoiding unnecessary repetition or technical jargon. Like for example, Apple's report use short summaries, clean visuals, and bullets point, okay, to convey strategy and results quickly instead of lengthy blocks of text. So they're saying the report should be concise. And the next principle is about reliability and completeness. Definitely, whatever information you are providing through the integrated report, another principle is that that information must be reliable and complete. So, for example, information should be accurate and complete, including both positive and negative aspects of the performance. So you should explain everything, positive performance, negative performance also, but information should be accurate and complete. For example, Coca-Cola's integrated report not only discusses water reuse success stories, they don't just tell you okay how they are reusing the water, but also admits challenges in water scarce regions, providing a balanced view of natural capital use. Okay. Then we got it here. They are saying consistency and comparability. What it means, they are saying this is another principle which you need to follow while you are drafting your integrated report. The report of 1 year, like for example, we got 2 years integrated report. So the first year report should be comparable with the second years. This is what they're trying to tell you. So the report should be consistent year to year, so readers can track progress, include explanations for any changes. If you have made any changes, you should include that information. Where possible, allow comparison with the similar organization. Okay. For example, Microsoft uses similar metrics, example carbon emission, employees diversity, across multiple years, because they are trying to make this report comparable from year to year. Okay. So then I have already, these are just the principles. Okay. Principles means say like when you create the integrated report, so you should remember, okay, you should have to include about your information about strategy, connectivity of information should be connected, stakeholder relationships must be explained, important information must be provided, concise and brief information should be provided, information must be reliable, complete and accurate. Okay. Information must be comparable. Okay, these are general features. Okay, of the good information, by the way. And but here we discussed about the content elements. Content means say the sections, how many sections you have to include. That I have told you, you have to include first section on organizational overview and external environment, second section about governance, third could be business model, fourth could be about risk and opportunities, fifth could be strategy and resource allocation, sixth could be performance, seventh outlook, eighth basis of preparation and presentation, like which standards you are following. Okay, ninth section must be like general reporting guidance, that some other important information that must also be included, and this is what I have already explained. Okay guys, so I hope so it is clear. So now there is a last section. It is short again lecture today, but the important thing, you need to grab this information. It's theory, and then you need to practice the question. So we are discussing now adoption of integrated reporting. This is the fourth and the last topic of unit number 6. Okay, so adoption of integrated reporting, what it means? It means here that when we adopt the integrated reporting, what challenges or what benefits or what risks or what opportunities are there. Okay, like we have to explain here key challenges in implementing integrated reporting, key challenges and the benefits of integrated reporting. This is what does mean by adoption of integrated reporting. So first we are discussing here key challenges. What challenges are there which you face, because you have to provide very concise and connected information, right? And this report is 360 degree view of the organization. Okay, we are trying to connect everything in the small report. So what key challenges are there while we implement the integrated reporting? So first key challenge is about the materiality. Materiality mean to say, again guys, I told you important information. Definitely it is very difficult for the organization to decide what to include, what not to include, right? Especially when you are dealing with the multiple capitals, you are dealing with financial capital, social capital, natural capital, intellectual capital, manufactured capital, human capital. So what to include, what not to include, so it's really hard to decide, right? So then second is what about the data quality. Yes, sometime financial data is verifiable, like financial statements, definitely they are verifiable, auditors they do it. But if you have a non-financial data like sustainability or human capital metrics, so again the quality of data is questionable, right? So what we are trying to do, we always try to collect the accurate and reliable information which should be the part of report, but this is a challenge for the organization, right? For example, many companies have strong internal controls for financial data but not for environmental or social data, right? So data quality is again a question here, okay, that can create a challenge for the organization. Okay, and the third is about the assurance. This is another challenge. Assurance means what? Like getting external assurance. For example, if you have a financial data, yes, we can get the audit for that. What about non-financial information? That's again a question, right? So who will make sure that this non-financial information is also correct? Generally, whatever non-financial information is the part of audited financial statement, like for example, companies they present report on internal control assessment. There are different reports are there which are the part of financial statements already, but auditors they try to verify that that information is also correct. But again, it's the question that financial information uh, is, you can say, verifiable, but non-financial information, because mostly it could be based on assumptions, etc., it is very hard to verify, right? Then lack of universal standards, because we have different definitely guidelines are there, definitely, but we don't have a specific standard to follow, right? Just we can follow the guidelines. So unlike financial reporting, in financial reporting we got IFRS, we got this a US gap also to do the accounting, but there is no single global standard for reporting value creation or ESG performance. There are some guidelines, but not a pet standards like US GAAP and IFRS. Okay, so here what's the solution? We can use the integrated reporting framework alongside standard like GRI, Global Reporting Initiative, Sustainability Accounting Standard Board, ISSB, etc. Then the fifth challenge is what? Tone at the top. Like here, leadership commitment is essential, definitely. Tone at the top mean to say the attitude of the top management. Definitely, they should take it very serious. Okay, about, because nowadays you can see ESG is in the market. Like companies maximum they are trying to report on the ESG. ESG means uh, environmental, social, and E stand for environmental, S stand for social, and G stand for governance. So they provide the information about ESG also. Okay, so but we need a seriousness of the top management for this. Now, guys, these are the challenges I have just discussed. Now here we are discussing about benefits of integrated reporting. Benefits, like what are the benefits? So, guys, remember here, if you will follow the integrated reporting, so what it can do, it can connect the financial and non-financial information into a single report. Okay, so it means simply integrated reporting can give a full picture of how the business creates value. This is the first benefit. So second thing, it can definitely, integrated reporting can help the readers to improve their decision making, right? And integrated reporting can also help the organizations for the resources allocation, like where to allocate the resources. Definitely it will integrate reporting because there is a one section about the stakeholders relationship, so it can strengthen the stakeholders relationships also. So then increase the fourth benefit, increase employees engagement. Definitely when staff see their work contributes to the broader goals, definitely it will motivate the peoples also. It can reduce the reputational risk. How? Because in integrated reporting we also try to explain about environmental capital, like how we are affecting the environment or how we are protecting the environments. It can increase your reputations, or it can minimize the reputational risk, what it means. Okay, so it can build customer loyalty also, because nowadays some customers, they are very environmentally conscious. They would like to buy only those products which are environmentally friendly. If your company is doing something better for the environment, so it can enhance the customer loyalty, okay, with your products. Okay, then ESG can also help you to improve internal controls, especially for the non-financial data, because you are trying to definitely disclose non-financial information also. So break break silos, like finance, HR, sustainability team works together. We don't work in isolation, we try to work together. Okay, then may lower financing cost also due to better transparency and long term planning. Definitely, so it can reduce the financing cost also, or the cost of sources of finance. Maybe if you are environmental friendly company, so you can take a loan or lower rate of interest, etc. So these are the advantages and disadvantages. So this I have already discussed, guys, these things. This is the important, I would say in CMA exam, not much questions are tested from integrated reporting, but still it was our duty to cover it. So I hope so. If you have any question, you can ask. So what we discussed today, we discussed guiding principles like general guidelines, and then content elements like what sections we have to adopt. We have to show in the integrated report, and then what challenges or the benefits are there of integrated reporting. Any question if you have, please ask me.